Welcome back, everyone. We're still here for the podcast of the role of the TA in the Luxembourg fund industry. This is a podcast organized by LPEA Association and specifically by the Fund Administration Committee. I am still Maria Karekla, Director of Arendt Investor Services, and for the purpose of this podcast episode, we are warmly welcoming Nathalie Stif, Executive Director of JP Morgan, Head of Alternative Fund Services in the Luxembourg office. Nathalie, welcome.
Thank you, Maria. Thank you for having me.
We call the best to discuss about the task of a TA and to give a guidance to the promising professionals that are entering into the industry, just to give some guidance on what is a TA, what's the TA role in the fund circle. As we discussed previously about the onboarding of investors and the share registers, now we would like to focus more into redemption of shares and distribution of income. Maybe for some, this terminology sounds very Greek. I would dare to say, but we are here to clarify and to give some guidance to our audience. Nathalie, if I start by the share redemption, what is actually a share redemption and what is the role of the TA in this process?
Yeah, I can understand that for people that are not familiar with this field or who are new to this industry, it could be a bit of a daunting process, and there's lots to learn. So I appreciate the opportunity to explore some of these more technical questions and different work streams that are involved. So for share redemptions, so let's start with that. So the share redemption process, actually, when we talk about a redemption, we refer to the process where an investor is going to sell their shares back to the fund. So effectively what they're doing is they're withdrawing their investment that they made into the fund. So I'm guessing in other podcasts you might have looked into investor onboardings and how they come into a fund, but eventually maybe one day they want to pull their money out of the fund. We call this process the redemption.
So there is an option for the investors to take off their investment that they promised to the fund in the onboarding process. Do you confirm?
Yes and no.
It
depends. It depends on the type of fund. Mm-hmm. So let me just add a little bit of more color, if I may, to the redemption process, and then we can explore under which conditions we can go and do this. So an investor typically is going to go for or initiate a redemption process when they require liquidities, for example. So they'd like to have their money back. They will raise their request to the fund manager and submit the request for a redemption. So this means that investors have this comfort of knowing that they can access their funds when needed. Depends on the vehicle they've invested in. I'll explain that part. But the redemption is giving or providing back the liquidity to the investor. It makes it, I think, attractive to some investors, depending on the fund characteristics, that they can exit from their investments that they initially made. And then the portfolio manager behind it has to manage all that cash flow because you need money to pay back the investors. So under which conditions can we redeem our shares when we are investing into a fund? It's going to depend on a few factors. First of all, the type of fund you've invested in and the documents you have signed when you have onboarded into the fund. So, which is why we always tell people, you should never sign documents blindly. You should always read exactly what you're signing and agreeing to before doing that.
And by documents, Nathalie, you mean, I guess, the subscription agreement,
correct,
the prospectus, and the constitutive documents of the fund. Is that correct?
Correct. All of these documents will contain information about the types of shares or the types of units that
and the
you are
triggering
buying.
events of the redemption conditions, right?
Exactly. So in there, it will tell you the timing of the redemptions. So when should you submit your request? And it will tell you the process. So is it a form that you have to send to the fund, for example, or to the GP? So all of these details are outlined in those documents that you referenced, Maria. And the issue here is when you want to redeem funds, when you've invested in what we call an open-ended fund. So this is a fund where typically it's going to allow for redemptions more frequently. So it's subject to the pricing of the fund. So if it's a weekly NAV, for example, or a monthly NAV, every time pricing is done, there's the opportunity also for the investors to say, I want to redeem my shares at that specific moment.
So for the newcomers in the role, in the TA role, just to put it simply, Nathalie, would you say like the open-ended funds have their door open for coming and going, for exiting and entering, while the close-ended funds, how would you say, like they have their door closed, so once you are in, you can not go out until the end of the investment period?
It's one way of looking at it. If we want to simplify, especially because we are addressing this podcast to people that are not familiar with all of this, it's one way of looking at it. Open-ended means there's going to be a rolling amount of investors that come and go into the fund over the life of the fund. Whereas closed-ended, it's the other way around. So the fund manager will launch the structure, have a base of investors that they will launch the fund with, and those investors will come in with usually a commitment to invest over time into this fund. And the process by which the commitment becomes actual subscriptions into the fund is called a capital call. So then the investment manager will say, or the fund manager will say, okay, you've committed, let's say, for example, Maria, you've committed to investing €1 million with us. We are calling you today for 15% of your commitment, and you are then due to pay. You then officially have, let's say, your ownership is therefore materialized once you have paid those capital call notices.
And the obligation to transfer the money, to commit, to realize the commitment you promised in the beginning.
Absolutely. We use the word commitment because it is, just like in real life, it's an actual commitment. You are engaged to pay, you're committed to pay the amount that you've promised to invest into the fund. And usually, like we said, open-ended funds, there's this rolling basis of investors that come and go. There is on the closed-ended fund, it's the other way around, right? We set up with a base of investors. It is a little bit more difficult to get out of. It is not impossible. The objective, though, is to stay on board until the liquidation of the fund. So once they start liquidating their assets and closing up their activities, but there could also be specific periods during which you cannot redeem your shares. So this you have to look at. That's why I'm saying, make sure you read the documents. If you do not understand them, go see a financial advisor who can point this out. If it says there's a lockup period and you cannot redeem for the first, 3 years, for example, that means you're not going to get your money back for 3 years. So in both, sometimes also in open-ended funds, we have that same mechanism. There could be a lockup period, so pay attention to that. There could be also significant market events that could trigger the need or an opportunity for redemption. So sometimes that's also foreseen in the fund documentation.
That's very nice. Let's go back then again to share redemption. So the investor, subject to the documents that she signed, he can exit the fund prior to the end life cycle of the fund. So by this, what does it mean for the investor that the investor, once they get there, can they partly redeem their shares or fully? And can they, once they get all of their money back, they cannot come back, or we close the share register for them? And what will be the result for the funds?
So an investor can redeem all or part of their holdings. So again, the prospectus, the subscription documents, they will dictate if we allow partial or total redemptions. Because keep in mind, once the fund manager receives your request to redeem, they have to make sure they have the liquidity to pay you out, right? So you have to give sufficient notice to the fund manager, and then they have to ensure that they have the cash flow to do that.
So liquidity of the fund is very crucial to go to this exercise.
Correct. And it's one of the challenges, if not like one of the biggest challenges, I would say, that fund managers have experienced in the alternative space. A lot of them have recently launched into the open-ended space. So their shares or their register portion is open-ended, but they still invest in private equity or real estate. And these are, they're investments that are harder to liquidate than listed or traded securities, for example. So when an investor comes and says, I want to redeem €1 million of my shares, and your portfolio is made up of buildings, how are you going to manage this? Because that, if you don't have the liquidity, that means what? Potentially you would have to sell a building to pay back the investor. So there's usually in there in the fund documents, there's going to be provisions about the timing, the amount of notice that is given, and then potentially also the amounts or number of shares. Could be partial, could be total. However, I don't recall seeing documents where an investor who exits is prohibited from coming back. Okay, so open-ended funds, sometimes, an investor could exit partially or totally and then reinvest down the road.
Very interesting.
That could happen, but I've never seen somebody say, once you're gone, you cannot come back. So that's something to watch out for. I think this is again something would be specified in the fund documentation and the subscription document.
So it's not a death road, let's say.
No, exactly. And I think like the fact that this typically closed-ended business has democratized itself, and open-ended funds have, started to show up on the market and are a hot commodity, let's say. It's contributing to everybody, like it's allowing more people to be able to invest into these types of vehicles and to benefit from investing in real estate or investing in private equity, for example.
Perfect. If you can simply describe the procedure, the steps that an investor, once the investor shows the intention for the redemption until the actual redemption realized, what are the steps, if we can classify in 5 different steps, what are the steps that an investor needs to be aware for the share redemption?
Yes. So I think the first step is when an investor wants to redeem their shares. So the first step is they should always refer back to their fund documentation. I think we've mentioned fund documentation 10 times since we started talking, but I cannot stress enough, go and look at your fund docs before. So that will be the first step. What does the document say about the redemption process? But typically the first practical step will then be to notify the fund that you want to initiate this redemption process. So some funds require a written request. Some of them have a form already that is available to initiate the request. Again, this will be something that you will need to be familiar with when you subscribe, but there's usually a written trace of your intention to redeem those shares.
Notification to whom, Nathalie, specifically? To the fund managers, to the members of the board, who is actually hold the keys for the procedure to actually permit or make the final decision for the permission of the share redemption?
Yeah, that's a good point, Maria, because we keep using the word the fund, and the fund is not an actual person.
Behind it.
So who is behind it? Yes, of course, there is a board, but there's a GP also, that a general partner that manages the fund. Requests are typically sent to the GP of the fund. There are also certain funds where the board has to approve certain redemptions, in terms of, especially I think with closed-ended funds, this could be something that goes to the board. But you submit your request to the GP of the fund. Some open-ended funds, if you have a financial advisor or you've bought into through a distributor, the orders can also come in through that channel as well. But everything is funneled back into, the people that manage the actual funds.
And this is where the TA role comes, like the investor needs to send the notification to the TA, because I want to make the scenario like we want to see the role of the TA in the share redemption.
Yeah.
So the investor needs to notify first, needs to send the notification to the TA, or the TA, once received the notification and the approval, they need to do all the necessary actions thereof.
Yeah, correct. I mean, the transfer agent will get the copies of the redemption requests, and the TA's role is to handle the administrative tasks that are involved with processing this. So record keeping, processing into the system to reflect the redemption into the share register. It will be also monitoring the cash movements, potentially, depending where the cash sits. If it's with the fund administrator, sometimes they are external, but if it's with the fund administrator, they will also affect or initiate the cash movement that comes with it. But then the transfer agent also verifies if the shareholder or the let's call it investor rather than shareholder, but the investor's account is in good order, right? So if all AML KYC documents were
is in good standing,
is in good order.
Again, the AML thing comes in at the exit of redemption of any shares.
Exactly. So what I would say, I don't want to diminish the transfer agent's role in the redemption process, but never forget the transfer agent is executing instructions that they receive, right? So
from the fund.
Because, I mean, the transfer agent is not the person who's deciding when do we distribute, when do we redeem, and when do we let investors in, right? So we actually have this role of ensuring that all the transactions that occur are in compliance with the fund's constituting documents. Yeah.
Again, TA is the safekeeper of the procedure, but not the actual authorized person.
Correct. That's actually a really perfect way of putting it, I think. And you can think as the transfer agent, maybe also as a bridge between the fund and the investors.
Exactly. The bridge between these two forces that make the business, the investment business, move on. So just to go to the steps, just to finalize the steps. So the attention is notified to the fund. If there is liquidity, if the conditions set by the constitutive documents they're met, the approval is given, and then the TA needs to do the administrative task to actually make the movement of the cash, of the funds, actual money amounts to the investors.
Correct, and then redeem the shares in the shareholder register.
Right. In your extensive experience in these things, is there any example, any practical example, or something that it was a case that really captured your attention, or you can contribute to the audience today about share redemption? Is there anything that the new TA agents can look more into or be aware of, and it happens to you in real life?
Yeah, I can think of one example that comes to mind. It was a few years ago, whereby a fund had constituted an open-ended scheme investing into private equity and real estate, let's say alternative investments. And the investment manager or the fund manager did not foresee that redemptions would come so quickly after the redemption period was over. And so once the first redemption period was over, investors already came back and said, I want my money back. no questions asked. I mean, everybody does what they want with their money, but they were faced with a very large amount of redemption requests.
Okay.
And what was so that that actually constituted a lot of work on the transfer agency side, because that means volumes to process, and every single process we've discussed, from the notification, updating the share register, the cash movement, etc., that follows. So you multiply that by the number of investors that come in one day and say, you know, in a typically very quiet or traditional space, all of a sudden we have volumes we need to be handling here.
Interesting.
And so from a transfer agent perspective, I would say if you're faced with having to play that role on open-ended funds, take a look at the type of investors that are in there, because institutional investors usually, or there's a trend that they'll stay for the longer haul, whereas retail investors, so Mr. and Mrs. anybody, your neighbor, or anybody like that, they still fail to see that it's a long-term investment that they're making. So that sometimes they were blinded, I think, by the attractiveness of
the returns.
Yes, I'm investing into real estate, but oh, hold on a second, I need
It needs
money.
7 years.
Exactly. It needs 7 years or 10 years to reach its maturity, and you know, and then the divestment process, and then we will distribute. So so some investors, I think were not ready or well prepared for this. So giving them the opportunity to redeem was very attractive, but then it creates this
Domino effect.
Yes, this domino effect, and it creates also all this work behind it, and the fund managers had to have the liquidity. So what ended up happening is, yes, they bought into real estate, for example, but they also had to keep liquidity sleeve on the side in order to manage those redemptions that were coming. So we'll see what the futures, you know, tells us about the success of these funds. But from a strictly, let's say, transfer agent task, if I were to start today in this field, that's one thing I would pay attention to. What type of investors are coming into the fund? Because that's going to be an indication of the volumes or the type of work that you'll be doing. Also, don't forget transfer agents. Yeah, we talked about, you know, redemptions and distributions. We're going to talk after, but the transfer agent also sometimes plays a role of investor relations. So sometimes you get questions directed to you and you have to, you know, reply to emails and questions. Some banks also have like a call center set up for certain funds where, you know, you can easily reply or quickly reply to investor queries. So having lots of retail investors in our alternative space, that creates a whole logistic that maybe the mainstream funds or traditional funds were more accustomed to handling, I think.
That's very, very interesting what you say. Thank you for sharing this very interesting case that you faced. I think that we cover the share redemption chapter. We can now move on to the distribution of income. I think this is what the investors are looking for, and this is the butter on the bread for the investors. Income. That's the main purpose that the investors are in the fund. How come a distribution of income realized in a fund? I would start first, what is a distribution and the types of distribution, if there is an ordinary or extraordinary income. And then I will definitely, Nathalie, ask you what is the role of the TA at the end about this process. So let's start first with the distribution.
Yep.
Ordinary, extraordinary income. What can you say about this?
Yes. Well, I get your point. Investors are going to be interested in how much money they get out of their investment. So the distribution is, you might have heard the term dividend, for example. That might be a term that some people are more familiar with. So it's exactly that. It's money that the fund has made and that they are giving back to the investors. So in terms of distributions, you could have an ordinary distribution. So sometimes there is a periodic distribution that is planned every quarter, for example, or every month. Again, did we not mention? Look at the subscription documents, look at the fund documents. It's going to be specified in there. But an ordinary dividend is going to be something that happens in the course of the life of the fund. We are simply handing out. Yeah, it's expected, and it is just
not out of surprise.
It's distributing the fund's income to the investors. Nothing sorry to say this, but nothing extraordinary about it, as opposed to the extraordinary distributions, which are going to be the result of, for example, capital gains that arise from the sale of assets. So that is more, it's less predictable, let's say, than the ordinary income that we're distributing. Imagine, for example, if I could take the example of a real estate fund, that comes to mind to me right now. So the fund owns, let's say, a rental building, commercial rent, doesn't matter. So distribution of ordinary income would be during the course of the year, the fund is collecting the rental income, paying off expenses, etc. And then they say every quarter we'll distribute to the investors. Extraordinary income would be we sold the unit or part of the unit, but we sold this investment. So the proceeds of the sale minus taxes, minus expenses, minus everything. So the net proceeds of the sale, we're going to distribute extraordinarily. So it's a one-off. It is something that you cannot predict, as opposed to the ordinary income would be almost predictable because of, the rental incomes that are coming in through the life of the fund and the life of the building itself.
So just to sum up, the recurrence and the predictability defines the ordinary from the extraordinary income.
Exactly. And I think the distinction is important to make, Maria, just because an investor, they have to manage their expectations, right? So they cannot expect to always have an extraordinary income coming their way, right? So they have to be aware of this is a one-off or this is the regular distributions that I'm receiving here.
Perfect. Can I give you another terminology to clear up the scenery? We're talking about distribution. Can we say what is the difference between distribution and de-investment, Nathalie?
Yeah. So the distribution, which we just spoke about, this is the process by which we refer to the payments that are made to the investor. So it's from the fund's earnings, and that money is then distributed to the investors. De-investment or divestment, I've heard that word also before, but de-investments is the sale of the assets themselves. So that's the process by which, usually towards the end of the life of the fund, we're going to start selling the assets that the fund owns. And then that's going to generate income. That's going to, taxes sometimes also to be paid and expenses related to that. But de-investment is going to translate into cash distributions for the investors. Residual cash was
so the investment is the first stage that leads to probably distribution of generated income.
Correct, because when we wind up a fund or liquidate the fund, there's going to be usually the final distribution at the end. Whatever has been sold after having paid all the expenses, whatever's left is then also distributed to the investors.
Perfect. And what is the role of the TA, the transfer agent, in this distribution of income? We sold our assets, we have the recurrence, we have some income to distribute. What does a TA in the fund industry needs to be aware, needs to do during this process?
So, Maria, the transfer agent, it's important to note, is not the person deciding that we are distributing, correct? So keep in mind, we always act upon instruction given to us.
Correct.
So the fund and its governing instances are going to take the decisions. Hey, now it's time to distribute. So transfer agent, please go ahead and distribute X amount. Yeah. So the role of the TA is going to be, there's multiple steps or multiple facets, let's say, to this role. The first one is going to be to facilitate the logistics around the distribution. So again, acting as a bridge between the fund and the investors. So handling the logistics is going to mean what? How much are we distributing? How much goes to each investors? Get the approval from the fund's governing instances, and then pay out this money to the investors. There's going to be also the record keeping part of it, because just as we're keeping track of who's coming in, who's going out of the fund, we also keep track of distributions that are being made. So another important step would be the record keeping. It's important to do the record keeping because in certain jurisdictions, not just Luxembourg, but you could think of the United States, for example, or in Canada, there is specific tax reporting that needs to be produced for the investors.
That triggering this distribution.
Exactly. So when distributions are occurring, there are, I'm thinking, let's say, like in the US, for example, there's tax forms, like the Form 1099 that needs to be filled in and states, what are the distributions and the types of income that are received. So there's all kinds of tax reporting that we do also in Luxembourg in terms of, FATCA-CRS, for example. So the tax reporting, and then the communication to the investor, so their statements, their distribution notices, for example, and all of that is also going to be the paperwork that we handle and provide to the investors. We are also going to take a look, I think, at the let's say the handling of reinvestment options. We didn't talk about this, Maria, but you should know that there is sometimes the possibility that's given to the investor that when they get a distribution in cash, they have the option sometimes to reinvest that into the fund. So the TA is going to intervene as well on this. Again, refer back to the fund docs to know if this is a mechanism that's allowed on your end. But that is something that some funds offer, and then that the transfer agent is going to process. It goes back into subscription type of processes. Yeah. And one thing that we're going to take a look at before actually effecting the distributions, we're going to take a look at if the investors that are receiving distributions or going to receive distributions are not impacted by any type of restrictions from a legal sense, meaning, for example, there are regularly updated list of sanctioned people against which distributions should not be made, for example. So if that would be the case, that this would be something that we would typically withhold and not distribute. Otherwise, I spare you the legal details of what could ensue if distributions were made to such people, but that is something that the TA is going to take a look at, is do we distribute to authorized and in good order investors?
So again, if I can summarize, and just to close the distribution chapter, which lead us to the end of this podcast. The TA is there to protect the investors and the best interest of the fund by proper keeping record of the procedures and check the to-do list or tick the boxes on the requirements as per the constitutive documents and the regulations.
Correct. It's a role where I would say a lot of things converge, right? So it's the record keeping, it's the legal aspect of it, and it's the documentation part of it that converges into the role of the transfer agent when it comes to both redemptions and distributions.
Thank you so much. It was a pleasure having you here, Nathalie.
Thank you
for the podcast, this podcast episode. Have a nice evening.
Thank you, Maria.